Hey traders, this is Ron Haidt at Market Tamer. Happy Monday. Hope you had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Kick off here with the Dow. The markets were down a lot today. They rebounded off those lows. In fact, the Dow ETF, the diamonds, finished down just under 1%, basically $2 or 200 Dow points. But at one point, we were down over 500 Dow points, which would have been about $5 in the DIA. If I zoom out a little bit here, we can see those lows down around 235 are still sitting there. There was a low around 240. We got pretty close there today, within 100 points of it, or $1 on the DIA. The trend here is still down. It's like I said in the weekend video. Interestingly today, volume was not really high. It was definitely above average, but it wasn't like what we saw earlier this month when we had big downside crashing days. So the selling doesn't seem to have that much of a bite today in terms of volume. We move on to the SPY, something I do have a bullish position in. You can see we're coming down, we're bouncing, we're rolling over, just like I said in the video. The target zone is that 255, 260. The low in SPY was 259.85. We hit the support zone, and interestingly, we bounced. But in terms of downside potential, we closed at 263. You could still say there's another $8 in the tank to get to the bottom of that support range. So yeah, we got there, we bounced. Trend is still down. If we go to the Qs, we can see they lost 2%, over $3. 155, maybe something around 160 for support. Interestingly, that's about where we bounced, 160 today. But again, keep an eye on that 153, 155 area. If I zoom in here, we also came off the lows. The intraday lows were 160.09, finished at 163, so $3. Paired about half those losses today. But why that candle is so big and red, just like on the other indexes, we actually gapped higher, gave back those gains, and then rolled over. For example, if I switch off of Thinkorswim charts and I just go to the ES, which are the S&P futures, here's where we were around 9:30 Eastern in the morning. We're way up there at basically 2,700. We then tipped all the way down to 26. That's a 100-point S&P move, or $10 in the spiders. It is massive. And then you saw that you can see that candle at 3:45 p.m. Eastern. If I zoom in here, it was almost bullish engulfing, and then it led to a pretty quick rally. All right, let's get in here. Let's look at the Russell. Finished down only 0.5%, so it did better than the others. We did not go to new near-term lows, but guys, the markets remain bearish on a daily basis. We did get another high wave doji today on the VIX. Had a doji the past couple days as well. The VIX is still pointing higher, even though we're not launching higher, and equities are still pointing lower. Let's take a look at some individual stocks. Apple does have earnings November 1st after market close. That is Thursday. We closed just barely below some of these lows. So I'm going to call Apple clean to support, but it's sort of breaking. It did definitely break it intraday when the low was almost down at 205, finished at 206.09. The gap fill at 190 is on the table, and right now that is coinciding with the purple line, which is the 200-day SMA, the institutional moving average. With earnings coming up, this might get us out of our multi-month trading range. We say hello 200-day, that's a big drop. Or maybe we even go and break out to new highs. So we'll keep an eye on Apple. Amazon plummeted over 6% today. On Friday, it closed below the 200-day. Well, today was their follow-through, or what? Big volume. The next major support area is down near 1350-ish. I mean, that's huge. That's almost, $180, $200 lower ballpark on Amazon. Google finished down about 4.5%. They're coming into that $1,000 area, which is support, which we've been talking about ever since it broke the 200-day earlier this month. The low today was 1,007. We were within $7 of tagging 1,000. Once we broke, just zoom in a little bit here. Once we broke the 200-day on October 10th, the $1,000-ish area was the target. It's taken us a couple weeks to get there, but we have arrived. Facebook has earnings tomorrow night, Tuesday night after market closes. I think this one could be a volatile one. We've had the whole data breach, the lying. I mean, those are actually, I suppose they're crimes, but I guess it's not if you have lots of money. Um, hiding stuff and doing all that good stuff, but whatever. This was the support zone way back here. We've breached it. The next support zone is way down here, around 120-ish, 115-ish. That's $30 or so lower. Over 20% lower would be the major support. If it were to gap to the upside, let me delete that line. If it gaps to the upside, probably the 200-day would be a target, and then a gap fill up here. This could be an interesting one to play a straddle or a strangle on in a paper trading account just for educational purposes, because we might see a bit of a move here on Facebook. I'm not saying it will, I have no idea if it will or it won't, but given where it sits and it's in limbo here, is this going to be reversed and the money's coming back in from an advertising perspective? Or is it going to be, oh dear, it's worse? People aren't trusting Facebook with their personal data. The advertising is getting worse, not better. And then we end up down here. So I'll be curious to see how Facebook does. Two stocks that did move today to the upside, despite the market being in a bad spot, was Decker's Outdoor, DECK. We're literally challenging all-time highs here. If this market bottoms, or when this market bottoms, and it might take to the election until we see the outcome, this is one I'd keep an eye on from a bullish perspective, just because we had a big earnings move, came off the highs, but a breakout here would be very technically bullish. And CTB is Cooper Tire and Rubber. With their big earnings move today, even on a bad day, they're basically breaking out already. The target would be up there at $40. That's 30% potential upside before they hit major resistance. Now there is a gap fill at 35. That's 15% higher, but still, those are two for bullish trade ideas. Next up are L3 Communications. Bad earnings move. Target's 180. Only $6 lower, right? Not the end of the world. So maybe about 2.5%. But if that falls, then you have to come back down to this consolidation range, 160, 170. So there's still a lot of downside technically to L3. It is oversold on a daily basis, and 180 falls, it could go another, what is that? 15, $20, $25. FDC is First Data. They lost over 16% today. Their target's a gap fill at 15. This is only an $18 stock, but that's another $3. So you're talking another 15 or so percent. And then I had a question on Walmart. If this looks like a cup and handle, it does. So that is the cup right there. Here's a little bit of a handle. And Walmart's holding up extremely well, which is something we commented on in another video, that when the market stabilizes here, this is one to watch as well. So Deckers, CTB as in Bravo, and Walmart would be things to keep an eye on. And then XLF, there was a question in banks in general. From a trading perspective, I think it's a little tough. There's different resistance stopping points, but the easier trade right now might be something down, 23.5-ish. It's not that far, but with the banks, see if I zoom in here a little bit, make it easier. With the banks being bearish, it's going to be hard for the S&P to really rally in the overall market. Right now, there's this little bit of support right around 25.5. That's sort of where we are. And then it's down into that 23.5 area. Okay, so again, bears have the edge. Like I said in the weekend video, between now and probably Thursday is the chance for the market to sell off, then looking for a rebound, maybe cover some shorts going into Friday, and then election is Tuesday, and we see who wins. If there's going to be a Republican win, which is sort of more of a stability, not in terms of what's better for the country. This isn't a political video, but uncertainty is what the market hates. And if one side of the power, let's call it the Democrats, get in, and then it's a split house, that could create uncertainty, and the market may not like it. And right now, that's why we're seeing this sell-off. It's not that one party is better than the other. It's just about uncertainty or certainty. An election can create uncertainty, and that's what I believe is one of the main reasons we're selling off here. It's not really tied to interest rates. It's not tied to the tariffs. They run all these headlines, and it's just a bunch of baloney. But I think once we get past the election, we'll know what's going to happen, as well as we're going to be entering the meat of the fourth quarter, which is typically where the U.S. markets stage a major rally. It's one of the best trading times of the year, and then it takes about a 2-week period off at the end of December, and then it goes right back at it beginning of January. So I'm going to be doing some webinars here once we find this bottom and we start to turn, because I think it's setting up to have a bunch of wonderful trading opportunities into year end. All right, so with that, wish you guys all the very best, and we'll see you in the next video.